So we're focusing on, as I said, on the dollar. So the first thing we're going to look at, and these are some of the you see my chart? Okay. So these are the dollar pairs, and if you recall, for example, so which one should we start with? Let's start with the Aussie dollar, because that was one of the, we'll do them anyway. So from last week, these are the numbers. We were short the Aussie dollar, or the plan was to short the Aussie dollar from 98.13, which is pretty much that day right there. And it took us all the way down. This was the plan from last week. It took us all the way down to 95, practically 80. So we had about 300 pips on that move. That was that, and that's what you want to see. When it breaks the structure point, you get the confirmation from the price action that it is behaving as per your expectation, and you get the follow through to the downside. That was, and right now what you see over here is, if we didn't have the Royal Bank of Australia cutting the interest rate, that by itself is a major sell signal, and all what we have to do now is short it. There is no reason for us to buy it or even to consider going long the Aussie dollar unless it comes back and trades above the 97.48, which is the daily high over here. So there is no reason for us. If you look at the chart, this was the short covering that came in anticipation for the cut. One second, guys, I just have to ask something. So that was a short covering rally that came in, going into the news after the big decline. Look at the decline that we had. So you had this major decline. That is the structure point that we had, the 98.45. We capitulated, and all what we did now in the last couple of days is, and that was the short covering going into the holidays. So right now we want, our trade in the Australian dollar is easy. We want to be short the Aussie, and there is no reason for us to buy until our buy signal is triggered. The first buy comes in right above here. That is the first buy. It's not a long-term buy. It is not a trend change. It is just, it could be a trigger for a short covering rally. So we will just put our buy here in the Aussie dollar at above 97.47. This will be our buying point, and we'll be trying to take it for the upside. On the short, this is what we have here. That is the latest momentum. That is your failure. So therefore this here, anywhere below the 97.10 would be our short. And since I have a low here at 97.05, and I do have a structure point at 97 even, let me double check. This is, no, I don't have something in 97. So my structure, my 4 daily lows over here is the 97.05. So I'm going to go short the Aussie dollar right below 97.05. That will be on my short. And if I buy it at 97.47, I'm going to place my stop right over here. I mean, I'm just going to give it 25 pips. I mean, there is, so my stop is going to be below 97.15, which is the on the other side of the range. I mean, that's, you're just giving it 20 pips or so. And on the short side, if I go short below 97.05, again, I want this thing to continue to the downside. So my stop is going to be right above the market side over here, which is 97.37. And my structural long point to the upside is still the, in this case now, is the 98.45. As you can see it right on the daily chart, because now we're below the 98.45, and my structural low now is the 96.64. And keep in mind, guys, that the 96.64, that is a major point. If this thing breaks below it, you should be looking for capitulation in the Aussie dollar. So this is the Aussie dollar. We're buying above 97.47. This, I don't know which is clearer for you. I'll put them both side by side. So we're buying above 97.47, and my stop is going to be 97.15, so I'm risking about 30 pips on that trade. My structural long point above that is the 98.45. On the short side, I'm going to go short below 97.05. If I do, I have a structural short point, which is the 96.64, which, of course, if we break that, that should lead to a capitulation. And my stop is going to be the 97.37. Okay, that is the Aussie dollar. Let me save it.